Okay, yeah, we're live now. Oh, awesome,
Yep.
awesome. Oh, the slide is no longer showing. We need to have the slide. And the slide was okay. Awesome, awesome, awesome. Yeah. Good evening, everyone. We are live now. We are live. Happy new month. Yeah, welcome to another episode of DeFi Monday, proudly brought to you by Binance Africa. And we are going to be discussing what is happening in the DeFi space. My name is Kende Lawal. I'm your host, and my co-host is Kazim Saidu. I'm very glad to be here today. Kazim, how are you today?
Yeah, definitely doing great. Welcome everyone. It's another edition of D5 Mondays, and it's always a pleasure to be here with you. So we're going to be looking at a lot of exciting things today, and Kennedy is going to go first and give us what he has for us today. Thank you.
Okay, okay, awesome. Thank you, Kazim. So to begin with, I need to run a short disclaimer. Nothing that we're going to be sharing should be considered financial advice. You will still need to do your own research, your own due diligence before making any investment decisions. And also, if you participate actively, you ask questions, you get to you get to have a chance to win 100 BUSD courtesy of Binance. Okay, so without further ado, let's dive in. All right, so today we are going to be looking at the concept of bridges in DeFi. We are going to be looking at popular bridges. We're going to be looking at vulnerabilities of crypto bridges, and we'll do a little practicals. All right. So, bridges in DeFi. I'll start by defining what a bridge is. So, a bridge is simply a structure that is built between 2 points, right? And is done so that you can be able to pass over an obstacle. The obstacle can be an empty space, it can be water, it can be a valley, right? So if you are bringing it down to crypto bridges allow you to communicate with different blockchains, right? It allows you to benefit from utilizing multiple blockchains, right? And it provides a full-fledged financial system that is accessible globally. Why is it full-fledged, right? So right now in crypto, we have some people, they are the Bitcoin maximalists. We have some people they are into Ethereum, right? So what bridges does is that it brings the two communities together, right? You can bring your Ethereum, bring it to another blockchain, right? Bring it to BNB, right? Use it there. If you are tired, you come back to Ethereum, right? So bridges allows you to use your cryptocurrency asset, your smart contracts, your information like NFTs across different blockchains, right? So it solves this issue of interoperability, right? Interoperability simply means that products or systems work with other product or system, right? So it works across platforms. Okay, so with bridges, you can transfer your NFT, as I've said earlier. You can transfer your cryptocurrency assets. You can transfer your smart contracts across different chains. Okay, a good example is your Ethereum. Normally, Ethereum should work on Ethereum blockchain. That's the layer one, right? But with a bridge, you can bring your Ethereum to the Binance Smart Chain and use it, right? So it solves interoperability. Okay, so we have two major types of bridges in DeFi. We have the unidirectional and the multi-directional. So unidirectional just means uh, it, it solves interoperability between two blockchains, maybe Ethereum and Binance Smart Chain, right? While multi-directional means, a lot of blockchains together in a single bridge, right? Such type of bridge, they call them multi-chains. You can have uh, Ethereum bridge there, BNB bridge there, Polygon bridge there. You can have even Smart BCH bridge there. Okay. So having said that, let's look at the most popular bridge that we have right now in DeFi, right? Okay, so the number one bridge is Portal Bridge, and Portal Bridge was formerly known as Wormhole, right? And it's a multi-chain network that allows you to bridge up to 12 crypto assets, right? On Portal Bridge, you can bridge Ethereum, you can bridge BNB, you can bridge Solana, you can bridge Oasis, you can bridge Polygon, you can bridge Avalanche as well, right? So you can move assets across all these blockchains, right? You can also move NFTs and tokens, not just the native coin, right? You can also move NFTs and tokens. Okay. The next bridge, we have the Binance Bridge. The Binance Bridge allows you to also move assets cross chain, cross chain. And a simple idea of this Binance Bridge is, let's say you want to withdraw USDT, right, or Ethereum on the Binance.com exchange, right? So when you want to withdraw it, you will see that you can actually withdraw that Ethereum or BNB or that USDT to another network that is not its own network, right? Ethereum network is Ethereum, right? But you can actually withdraw that Ethereum to another network like Binance Smart Chain, right? So in a way, that's also a bridge. And but before you do this, you need to make sure that you set up your MetaMask wallet, and you configure it to use the Binance Smart Chain. And we covered this last week, where my co-host Kazim Saidu showed you how to create a MetaMask wallet and how to configure it to use Binance Smart Chain. So in case you were not around, you can go ahead and watch that video, right? Okay. So one thing about the Binance Smart Chain is that it has zero transaction fees. That's what I like about the Binance Smart Chain. You're not paying any fee for using the bridge. You're only going to pay a fee, right, to exchange assets from the blockchains, from the blockchains, right? But Binance is not charging any fee for that bridge. All right. So let's move to the third one, which is the Avalanche Bridge. Avalanche Bridge is a bi-directional cross-chain bridge between Avalanche and Ethereum. I've told you, if it's bi-directional, right? So it's just between Avalanche and Ethereum. And you can also send tokens, you can send NFTs from Avalanche to Ethereum, or from Ethereum to Avalanche, right? The next one is Synapse Bridge. Yeah, Synapse Bridge is a layer infinity decentralized protocol that aims to facilitate cross-chain interoperability in DeFi, right? This is a multi-chain as well, right? It's a multiple blockchain network. We have Ethereum in the bridge, we have Binance Smart Chain, we have AVAX in the bridge, and right now it has about 96 million in total value locked. All right. The fifth bridge is the Bitcoin Cash Smart Bridge. This is relatively new, right? And it's EVM compatible. When we say EVM compatible, that's Ethereum Virtual Machine compatible. The EVM, the Ethereum Virtual Machine, is what makes uh, application, decentralized application, to run on Ethereum, right? So this Bitcoin Cash Smart BCH bridge is EVM compatible. You know, it runs as a side chain alongside the Bitcoin Cash network, right? And to me, why this thing is interesting is because, Bitcoin Cash is a fork of Bitcoin, right? And Bitcoin itself, because it's mainly for exchange of value, there's little to no programming that is being done on the Bitcoin blockchain, right? But on Bitcoin Cash now, they're already bringing DeFi, they're bringing decentralized application. So I see it's quite fascinating, right? So with the smart BCH bridge, you are bringing Bitcoin Cash into DeFi, right? And you can use that BCH on different protocols, like earning yield on your BCH, farming, decentralized trading, and so on and so forth, right? So with the smart BCH bridge, you have instant swaps within BCH and smart BCH. So you convert your BCH to smart BCH, and you can use that smart BCH um, chains, across different chains, right? You can send your BCH to smart BCH to smart BCH on the Binance Smart Chain and use it. If there's a liquidity pool that you can do farming, you can use it and earn some interest. So finally, we have the Phantom Any Swap Bridge, which is also a bi-directional cross chain, right, between Ethereum and the Phantom network. The AnySwap bridge is very user friendly, right? It's very user friendly, and it has a total value lock of close to $2 billion, right? So, having said that, let's look at vulnerabilities in crypto bridges, right? So, this thing called crypto bridges is not something that is perfect. It's not something that it doesn't have its own issues and constraints. So let's look at the problems with crypto bridges, right? So the first thing I would say is that you need to be careful because they are usually very complex. And I'm coming to explain why they are complex, right? So they are usually very complex and they are hard to audit, right? Blockchains are hard to audit, are easy to audit, right? You can look at the blockchain, which is a public ledger, trace things. But when it comes to crypto bridges, bringing two different blockchains together, they are actually very hard to audit, right? So, and the reason why they are complex is because two different blockchains are coming together. Let's say BNB and Ethereum, right? So, Ethereum, for example, is programmed in Solidity. BNB can also be programmed in another language, right? So, by the time you bring them together, these are two different programming languages, and there will always be hiccups, there will always be issues, right? And another thing is they have different consensus algorithm, right? Ethereum has proof of work at the moment. They're planning to shift to proof of stake, whereas BNB, the Binance Smart Chain, has proof of stake. So proof of work and proof of stake, there will always be little complexity. There will be complexity in them, right? So we consider crypto bridges to be one of crypto's weak spots. Yes, it's one of crypto weak weak spot, right? So, for example, we had the running Anxi Infinity blockchain hack. That was March 23rd this year, and the hackers were able to steal about $625 million, right? They stole about 117,000 Ethereum and 25,500,000 USDC, right? So one thing here is that how was the hack possible? So most of these bridges as well, they have nodes, right? They have nodes. So the Ronin bridge had about 9 nodes. So out of those 9 nodes, 5 of them were compromised. So that was like a 51% attack. So they took the money. We also had the Wormhole hack. Wormhole is now rebranded as Portal, but we had the Wormhole hack, which the hackers were able to steal about 120,000 it, wrapped Ethereum. In this case, they consider it an human error because one of their developers was able to spot uh, the issue, right? So he messaged it to one of their team members via GitHub, right? So the hacker was smart enough to get in touch with it and stole about 325 million. So what he did was, you know, you had Ethereum, you now use the bridge and you converted it to wrapped Ethereum. So that wrapped Ethereum, you can use it on another chain. So let's say you had Ethereum on Ethereum blockchain and you converted it to wrapped Ethereum, wrapped it on Binance Smart Chain, right? So the hacker was able to get hold of those wrapped Ethereum, right? And he converted them back to Ethereum. So he got the money, right? So finally we had Poly Network, and on Poly Network we had 600 million hack, right? And what the attacker did was, right, in the breach, what he did was his own private address. We have public key and private key, right? His own private key, the public address of his own private key, due due to a backend key that he had, like an administrative key that he had to the protocol. So whenever people are doing transaction, he used his own public key that he had private key to, right? He used it as where the money is going to be sent to. So he was able to steal about 600 million, right? But it was a white hacker, right? So it was an ethical hacker. So he returned the money, right? Somebody stole 600 million and he returned the money, right? So looking at this, we know that crypto bridges, they are one of the most innovative aspects of DeFi. However, they are the weak spot, right? And they are very vulnerable, right? So you need to always do your own research. Okay. So having said this, I will now move to the practical session. So we want to make this our discussion as practical as possible so that people will learn, right? We want to make this as practical as possible. So for example, let's say how you can make use of bridge, right? So in this first scenario, we are going to be using the Binance.com exchange, right? So on the Binance.com exchange, so let's say I have Bitcoin Cash, for example, I had Bitcoin Cash, right? So we all know that the blockchain for Bitcoin Cash is Bitcoin Cash, right? But I can actually send it to another network, blockchain network, like the Binance Smart chain, right? So if you have your MetaMask already set, if you had your MetaMask already set, right, to Binance Smart chain, okay, so you can copy your Binance Smart chain address, right? And when you are trying to withdraw, on your Binance mobile app, you go to the withdrawal page, you click on Bitcoin Cash, you click on withdraw, right? And under network, you choose BNB Smart Chain, you paste the address, and you withdraw to the BNB Smart Chain. So you are going to see it in your MetaMask. You are going to see it in your MetaMask, which is now the Bitcoin Cash is now a BIP20 token on the Binance Smart Chain. And you can use it if there's a liquidity pool, you can add it to the liquidity pool and start earning interest. So that's one way to use it. And you can also use it for BNB as well. You can withdraw your BNB to the Binance Smart Chain and use it in the liquidity pool. You can withdraw your USDT through the same method. When you are withdrawing it, you choose Binance Smart Chain, right? And you withdraw it to it, and maybe use it for farming, use it for liquidity pool, earn interest, and so on and so forth. Okay, so let's look at another practical example of using bridges, right? So before, if you want to withdraw USDT on exchange like Binance, right? Now if you want to send USDT from Binance to another exchange, right? Before, it was very, very expensive, and the fees was around $12. We all know what naira is saying now. So let's say you have $12, which is approximately about 8,000 naira, right? Or 7,000 plus. Let's say 8,000 naira. Imagine paying 8,000 naira for fees, sending USDT from one exchange to another, right? So what I used to do is, like, for example, if I want to send USDT from Binance to KuCoin, so instead of using the normal USDT network, whereby you will pay $12 fee, 8,000 naira, there are a couple of networks here on Binance that you can use. So we have AVAX C chain that you can use to withdraw your USDT. It has about 0.8 dollar fee. 0.8 is about 400 naira, right? Or 500 naira. So which is quite cheaper. We have the BNB Beacon chain, we have the Ethereum chain. You want to use Ethereum to withdraw, it's $4. $4 is about 3,000 naira, right? We also have Solana 0.8 USDT, Tezos 0.8 USDT, and we have Tron TRC20. So what I've been using, like if I want to withdraw my USDT from one exchange to another, is TRC20 network, right? So I will go to that other exchange. Let's say it's KuCoin. I'll go to KuCoin. I'll go to receive. I will go to receive USDT, and under the network that I want to receive it on, I will choose TRC20, right? So I'll copy that TRC20 address of USDT, right? I'll copy it, I'll come back to Binance. Under withdrawal for USDT, I'll choose TRC20. And when I choose TRC20, I will paste that address and withdraw my USDT. Before, it used to be free, $0. Then now they were charging $1, then now it's $0.8. So that's how you can move assets from one exchange to another and what pay cheaper fees. Yeah, you pay cheaper fees, right? So I would say that we now move to a more complex practical application of bridges, right? And in this case, you use it for arbitrage and yield optimization. Arbitrage and yield optimization. So sometimes in this crypto market, there are arbitrages whereby you can buy something low and go and sell it high at profit. It happens. And we also have yield optimization whereby you want to earn more yield, more interest on your crypto asset, right? So yeah, you can bridge up to 4 blockchain to get what you want, right? So you can move your crypto assets from one blockchain to another, maybe from, let's say for example, from Ethereum, you go to BNB, from BNB you move to Polygon, from Polygon you move to Avalanche, you get the arbitrage on the Avalanche, then you also move back. So the same way you move front, you also move back. So it's quite interesting, right? But I'll just give you some advice is that you should at least try to create new address for new transactions. Create new address for new transactions so that you don't get people to trace everything that you have been doing. Then also use spare capital. This is quite risky, right? Use spare capital. That is, don't risk more money than you can afford to lose. So let me give you an example. I have an example here that I saw online on recent. So this one is quite for an arbitrage opportunity on Bitcoin Cash. So this person, there was a time Bitcoin Cash dropped on a particular chain, right? So Bitcoin Cash price was around 106, but the person was able to buy it at around $90, right? So I will just give an explanation of how the person did this, right? So first, the person um, configured the MetaMask wallet to Binance uh, Smart Chain, right? So if you don't know how to do that, there's an article on Binance Academy that explains how you can configure your MetaMask to start using Binance Smart Chain, right? So now what the person did is the person used side shift. Some people don't have account on our regular cryptocurrency exchange that use KYC, right? So the person converted, let's say the person converted it to BNB using side shift, right? you know. Then from side shift, the person use Pancake Swap. We all know Pancake Swap, which is a day app on Binance Smart Chain. The person converted all the BNB to USDT using Pancake Swap, right? And from Pancake Swap, the person use Block NG bridge to convert that USDT to the USDT that is available on Block NG, right? Then using that USDT that is available on Block NG, the person came to MidSwap, right? So the price actually dropped on MidSwap. So the person used all those USDT, right, to buy cheap coin BCH on MidSwap, right? So after buying it, so the person will also use the same process, come back and get his crypto back, right? So this thing is quite interesting, and there's no one way to do it, right? There's no one way to do it. So you can maneuver your way around things whenever you see an arbitrage opportunity, whenever you see an opportunity to earn good yield, right? So you can you can you can you can combine different chains together, right? So having said that, we'll now have question and answer. So please ask your question, and I will hand over to my co-host Kazim Saidu, right, who's going to pick up from me. All right, so
All right,
thank you, Kazim.
thank you very much, Kenny. Thank you very much,
Please go
Kenny.
ahead.
I'm thinking I should read one or two questions I'm seeing here to you. Someone asked that the wrapped tokens are they the same price as the normal tokens? Did you get that? Hello, Kenny. Did you get that? Yeah. Hello, Kenny. Did you get that? You are muted. You are muted. You are muted. You are muted already. You are muted.
Sorry. Yeah, I can
All
hear you
right.
now. I can hear you.
So did you get the
Yeah, please
question, or
come.
I should? All right. So the person was asking that these are all wrapped token, all wrapped coin. the same in value with the actual coin. Like the wrapped tokens, the wrapped coins that we have, are they the same? Are they the same prices or the same token pricing with with the original coin, like a wrapped ether now? Is it the same price with ether? Did you get that?
Okay, okay. So actually, all right. So can you hear me?
Yes, yes, we can hear you. Go ahead. Yes, yes.
Okay, okay, awesome. So what happens is that when you have a digital asset on a particular blockchain, right, and you want to use it on another blockchain, so what they are going to give you is a wrapped version of the old one, right? So they're giving you a token that represents the old the old token on the other blockchain, right? So it's like an equivalent. But what happens sometimes in crypto is that their prices may fluctuate, and you realize that the wrapped version may not be exactly the same price with the original coin on the original chain, right? So it happens that way. But I would say is like the same.
All right, thank you very much. Thank you very much. All right, so let's just go straight into the remaining parts of the session. And I believe there will be no DeFi Mondays if we don't have DeFi updates. So if you need updates, I put some link on the slide there where you can also visit to check updates on DeFi activities as they happen. So we're going to give you some few DeFi updates for the past week and also in the last 24 hours. So for the decentralized exchanges, the total volume in the last 24 hours for all decentralized exchanges is about 2.2 billion US dollars. And currently, Uniswap version 3 exchange is leading the pack with about 993 million US dollars 24-hour volume, and it has about 816 trading pairs available. And this gives it a huge 44.5 percentage market share by volume. Following it is Pancake Swap version 2, which has about 185 million US dollar 24-hour volume and has a whooping 4,139 trading pairs available for users. Also, it takes about 8.3% market share by volume. The third on the list is Uniswap and Polygon, and Uniswap version of Polygon, which also has about 86 million US dollar trading volume in the last 24 hours, with about 289 trading pairs available. And this gives us about 3.9 percentage market share. There are a lot of them. As you can also visit the links are stated there for you to get more updates on these DeFi decentralized exchanges. Now, let me just move to the top decentralized finance tokens by market capitalization. Currently, leading is DAI stablecoin, which is number 12 on the global cryptocurrency ranking. DAI has a total market cap of about 7.4 billion US dollars, and it has traded about 791 million US dollars in the last 24 hours. Currently, it has a circulating supply of about 7.4 billion DAI. And following it is Avalanche Avax, which is number 14 on the global cryptocurrency ranking. Avalanche the price currently is about 23.23 US dollars, and has a market cap of 6.7 billion US dollars with a total 24-hour trading volume of about 572 million US dollars. Following it closely in the third position is Uniswap. Uni is number 17 on the total cryptocurrency ranking, currently about 8.18 US dollar in price, and with market cap of 6.2 billion US dollars. It traded about 265 million US dollar in the last 24 hours, and it has a current circulating supply of 744 million uni out of 1 billion maximum supply. So you can also check coinmarketcap.com to have all this information on the top DeFi tokens for the week. And it might interest you to know as well that the total market cap of all DeFi tokens currently stands at about 53.9 billion US dollar. That represents about 12.4 percentage decrease for the in the last 24 hours, and they've traded about 8.1 billion US dollars in the last 24 hours, which is also about 12.4 percentage decrease. Check coinmarketcap.com for more updates on this. Now, I would like to tell us on BNB chain, currently the top three performing tokens currently on BNB chain. To get this information, visit bnbchain.org, where you can get more information about BNB chain ecosystem. The top three performing token: the first one is the Age of Tanks, the second one is Tamon, and X World Games is in number three. They've been doing very well in the last 24 hours, and that also takes me to Dap Bay. DApp Bay on BNB chain. DApp Bay just launched last month. You can get quite a number of information, helpful information that can help you take decision on what is happening in the DeFi market and which project should you go probably check out and which one should you move away from. That's why you have the DApp Bay red alarm section, where projects that are suspicious to be fraud are listed. So you can go there every day to check for more updates on projects that are listed in the red alarm section. For example, today we have the WebDAO, Drip, Alrila Crypto, Ajrab Finance, Elron, Glamour Coin. These are some of the projects that are found suspicious and probably not advisable to invest in at this moment. Now, for the last part of the update, I want to leave us with a discussion that I want everyone to just put out your opinion there. Let us know what you think, if this is true or not. If it is true, why do you think it's true? If it is false, why do you think it's not true? The question is, are big players like Grayscale and MicroStrategy moving Bitcoin's price? Do you think these big players are moving Bitcoin's price or manipulating it? What's your opinion? Let us know, and we go from there. Now, I want to go into the topic of the day that I want to really take us through. Now, I want to talk of some use cases in DeFi, some use cases in decentralized finance. Today, we'll be talking about asset management and insurance protocols in DeFi. Already, if you're familiar with traditional finance very well, you would have heard of these terminologies: asset management or insurance. Every one of us probably has one or two things to do with insurance. If you don't have a car to insure, you probably are insuring your house or some other things that you've probably paid a premium cover for on insurance. Now, asset management, what does it mean? Asset management simply refers to any kind of method or system that helps individuals or companies manage their assets. So you could see wealthy individuals, saying they are looking for asset managers, people that will manage their wealth, their wealth portfolio, their asset portfolio. So this is very common among wealthy individuals, but it's not limited to them alone. So these assets may be represented by both physical goods like a house, an apartment, or a car, or non-physical ones like copyrights, cryptocurrencies, and other digital assets, which cryptocurrency is one of the most interesting one for us as crypto believers. So portfolios of asset managers now may include a variety of financial instruments such as real estate, mutual funds, bonds, equity and derivative commodities, stocks, precious metals, and cryptocurrencies. It's not until recently that many asset managers are now considering cryptocurrency as a real asset to actually be in their portfolio. So it's also important to note that depending on the context now, asset management strategies may relate to what is known as active management or passive management, because asset management are basically into two categories. It's either you managing it, you have an asset management active way or passive way. But what does this mean? Active management refers to the fund managers now, those who are in charge of this asset, or brokers that trade actively in the financial market, aiming to profit both in bear and bull markets. So, in contrast, what is passive management? Passive management simply means an investment strategy that does not involve active exposure. So, when you are into passive management, you are probably not exposing your portfolio to too much financial impact. So, aside from asset management being into that two categories of active or passive management, we also have them in various forms across different areas. An example is the financial asset management. You have the enterprise asset management, you have the infrastructure asset management, you have the public asset management, IT, which is information technology asset management, and digital asset management. So when you talk of financial asset management, you're talking of investment funds. And if you are talking about enterprise asset management, you are talking of fixed assets for an organization. Also, when you mention infrastructure asset management, what you're probably talking about is public infrastructure such as roads and bridges. Also, you have the public asset management, just like when you're talking about schools, parks, and so on and so forth. And when you move to the digital asset management, which is our point of interest today, you have things like the information collection and other digital assets that are available for you to put in your portfolio. Having talked about asset management, what about the DeFi insurance protocols, or let's just say insurance in decentralized finance? Because this started happening until recently, around that year 2020, when it started generating a lot of interest in DeFi. Also now, according to a research by Elliptic, it stated that around 10 billion US dollar was lost due to hacks and scams in 2021 alone. Just like my co-host has said about hacks and the risk attached to DeFi protocols. Probably when you're using bridges or even the normal decentralized application, there are a lot of risk attached, which is why you must do your own due diligence and do your research properly before you start investing in DeFi. So after regulation and maybe education of users, another thing that is of utmost importance is risk of capital loss. So which is one of the main bottlenecks for widespread enterprise adoption. So it's one of the most concerns that many enterprises or many companies or many individuals as well have, why they have not really taken their chance to invest in DeFi. DeFi insurance, in simple terms, refers to insuring yourself, like you are insuring yourself or buying coverage against losses caused by events in the DeFi industry. So just like you would buy a car and insure it against any damage or against accident or anything, just like you could insure your life against any event of unforeseen circumstance. So the same way, DeFi insurance is just you insuring yourself or buying coverage against losses that might be caused by any DeFi, any events in DeFi industry. Now, let's assume you are an individual or a company with capital locked somewhere in a DeFi platform. Now you are aware of the risk attached. That you've locked your funds now, but you are aware that there are risks attached. You could lose your fund if an uncertainty happens. So what do? You want to insure yourself against this risk because it's a known risk, and you probably want to insure yourself against it. So what you do is you go to a DeFi insurance provider and pay a certain amount in order to get covered in case you lose your capital due to a specific predetermined event. So now let's take more look into how DeFi insurance actually works. I have an illustration here. That is showing that I got from block data. You can see from this illustration. You can see from this illustration. I believe you can also just understand how it actually works. You, as the cover buyers now, you buy a cover to protect you, to insure you against a specific event. Now your funds now when you buy it is put into a capital pool. We also have the cover suppliers. The cover suppliers, another term for them are the liquidity providers. So you can call them the liquidity provider because when they supply cover, they supply an amount, just some funds now into the capital pool, where they also get interest on this supply, on this fund that have also locked into the capital pool. So they get this interest as a form of reward on their locked funds. Now, if anything happens, just like you've probably envisaged that it might happen that you lose your funds, and it's proven that truly you lose your fund, you get paid from that capital pool to mitigate your loss. But if it doesn't happen, the cover suppliers get their funds back probably over a specific period of time. Now, this capital pool is being managed by a blockchain smart contract. So everything happens in a decentralized way, which is the most interesting part. Different from the traditional finance that we know, different from the insurance in the DeFi, in the normal traditional world. So as the name implies now, everything happens in a decentralized way. Instead of buying coverage from a single person or company, just like we have insurance companies, instead of buying from such companies now, what happens is that you buy your coverage from a decentralized pool of coverage providers, which is known as the capital pool. So anybody can act as a coverage provider, just like you can act as a liquidity provider by adding liquidity to a liquidity pool and get rewards or interest on your provided liquidity. So how do you achieve this? If you want to be a coverage provider, You do so by locking up your capital now in a so-called capital pool. So by doing so, you effectively become a liquidity provider. So that qualifies you to get a certain interest. So as a coverage provider, you choose for which event. You also have to determine which event are you providing coverage for, or which protocol, which DeFi protocol are you providing coverage for. So you might, for example, now be very certain that okay, this exchange will not be hacked. So you are betting on that, and you are therefore fine with providing liquidity to the capital pool, which covers that specific event. Now, if Exchange X will not be hacked now, let's say it doesn't get hacked, so you are what happens is that you will now get your cover back. However, if Exchange X got hacked, the funds in the capital pool will then be used to cover the claims from people who bought coverage against that particular hack. So now, as a coverage provider, you are, of course, you are aware that you are exposed to this risk. So that is why you are being given this interest, this rewards on your locked capital, because you are also exposed to the risk of losing your funds should, in case such exchange got hacked or anything you provide coverage for really happens. Then you have the risk of losing your funds. So the interest, the rewards you generate on this locked fund is probably what you have left. But if it doesn't happen, you get your cover, you get your funds back. Now you might have been wondering, how are claims verified? So if I want to claim a cover that okay, my funds were lost in the event that I've already insured myself against, how do I claim, and how is my claims now, how is it verified? Now this is achieved in two ways. It's either it is done through the community, or what we call oracles. Now, DeFi insurance protocols are mostly set up using a decentralized autonomous organization structure, DAOs. We discussed what DAOs and the DAOs are in our last session, which you can also watch on the Binance African YouTube channel. Now, in this kind of structure, holding a token associated with the insurance protocol now gives you a voting right. So meaning that when there is a claim, you have the right also to participate in voting to either accept or deny such claims. However, some of these claims now are automatically verified, and this is where what we know as oracles come in. So what oracles do? Oracles are decentralized information mechanisms which verify external data. So they are not controlled by any voting rights or any human. So oracles can be set up to accurately track the outcome of certain events. So certain events that you've insured against, there are oracles that are set up to track the outcome of such events and distribute the information across the internet. So this can be very useful in DeFi insurance protocols, as chances of a dispute will be minimized. So in general now, what we have understood now is that you buy coverage against a specific event. This ensures you are protected against capital loss due to that event. Now, the premium you pay for this coverage depends on multiple factors, such as the coverage duration, covered amount, and the covered event. So the DeFi insurance protocol determines most of these things. Now, secondly, now on the other side are coverage providers. They underwrite your risk because they provide covers for specific events, meaning that they cover you in case the underwritten event happens. Coverage providers, therefore, they suffer risk as well and earn interest on the capital they provide. So they are exposed to risk, but at the same time, they earn interest on the cover that they have provided for such events. And anybody can act as a coverage provider. Just understand it as a liquidity provider. So if you believe now that you lost capital due to a coverage event or a covered event that you've already insured yourself against, you can file a claim. So we understand that you can file a claim, and different insurance platforms use different methods to verify claims. Sometimes it happens through a community vote, just like stated, and sometimes it could happen in an automated way, such as oracles verifying your claim and tracking the outcome of an event that has already happened in order to verify that your claims are genuine. Okay, what are some of the DeFi insurance protocols you can check out? This information is available there. You can check out each of these DeFi insurance protocols. if you are interested in insuring against an event. An example is the Bridge Mutual. You have the It's a risk. You have the Insure DeFi, I Trust the Finance, and Nexus Mutual. So these are some of the DeFi insurance products that are available out there for users to choose. And that's all about DeFi insurance for now. Now let's move to the second, which is the asset management. So asset management in DeFi now. You have assets, you have the traditional ways of managing assets, you have the traditional asset managers, brokers that do this. But in DeFi, there is a big difference. And this is definitely has to do with how it acts, which is the decentralized finance way. So, but there are complexities now associated with a DeFi, which create profound issues regarding the answer to what are DeFi assets. So, how do you determine DeFi assets, and how do they work? Assets in real world, and could now be tokenized and traded. So that's the stage at which we are now. You could have a house in real world and tokenize it and make it available to be for trading on any decentralized exchange. So you can easily find out that such assets qualify as DeFi assets. Now it is inevitable to wonder about the traits in DeFi which work in favor of asset management. So the three important characteristics through which DeFi empowers asset management are that they are transparent, they are trustless, and their composability. So what are these three things that makes it so unique and different from the traditional asset management? Transparency is something that is very, very common and synonymous to our blockchain. So anything when you mention blockchain or using blockchain, the transparency, the trustlessness is what are some of the selling points of blockchain technology. So transparency is usually a myth in the world of traditional finance. So presently extended settlement times ranging up to almost 2 to 3 days before you get settlement. And owing to these factors now, asset managers have to report public displays of their assets on a monthly or quarterly basis. So if you invest in a particular asset in the real world, so you could not be clear about the status of the asset at a specific instance. So it's not instant. You probably have invested, but you can't really tell what the status of this asset at that particular moment, because the asset managers have to report at a particular time probably in quarterly or weekly or monthly. So you can't tell the status of that asset. So you could only find out details about the performance of the fund and the asset managers in the previous quarter or the next quarter. So decentralized asset management allows comprehensive visibility at the block level. So what does that mean? It also offers you clear insights into assets performance and the asset manager. So you are able to see everything happening instantly. Instantly as it happens, you're able to see it, you're able to track your performance, track the asset status at any point in time. So one of the examples now is using decentralized using decentralized finance and asset management for transparency is this a Melon protocol. So in association with Avantgarde Finance, the Melon protocol now has devised the functionalities for easier asset creation. So you could go to these platforms to tokenize your asset, your own physical asset that you have now. It's what they offer is that they give you some reporting, trading tools, and manager incentives and investment mechanism that you could use to enhance your asset management. So any Ethereum wallet now could access their hedge fund or private investment funds. So if you can check them out, you can do that. So the set protocol is also an example of ensuring transparency with DeFi asset management. First of all, set protocol introduced token sets. You can also do some research about this, which has the first entry being the robo advisor tokens. And these tokens could adjust accordingly to the allocation of technical trading strategy. However, when we talk about trustlessness, it's a critical aspect related to working of decentralized asset management. And with the development of DeFi on Ethereum and other chain like the BNB chain, users now could connect their wallets and interact with asset management options. Interestingly, there is no need for providing any your customer information or documents. So that is something that is known with DeFi. You probably don't need any form of KYC to use any DeFi protocol. So, or you really don't need to know any information about the managers, the asset managers. So the most notable example of introduced trustlessness in asset management with DeFi is what we call the Pi DAO. It has integrated the DAO functionality in asset management, which it makes it easy and to create and manage your assets. So the trustlessness functionality now with decentralized finance asset management supports the creation of diversified portfolio tokens. And to the last part, which is the composability, traditional finance now, what they do is they require asset managers and advisors to work comprehensively on the creation of a portfolio. So that's in the traditional finance. So as a result of this, the asset manager could demand a higher fee to do that. So thereby increasing the cost of asset management. Now, how does DeFi asset management solve this particular problem? An example now is a DeFi Zap, which is currently known as Zappa.fi. You can also check them out. And what they do is they can show you aspects of composability. They've introduced the ability to bring multiple positions, yield and risk management, and layering exposure within a single transaction. So you're able to monitor different stuff at the same time. And also, they offer an evaluation of the risk profile, followed by recommendations of the right fit. Similarly, now there's another protocol which is Ray, or the robo advisor, for yield. They offer new approach for asset management, and it enables the movement of assets across various lending protocols. So these are several protocols out there doing wonders in the asset management field in DeFi, which you can also take advantage of to also boost your own portfolio and diversify your investment. Now let's look at some questions now about DeFi asset management that many people have and many people really want to know before they actually go into this part. A general question or a common question is that people ask is they ask that is it possible to include real world assets in the scope or of decentralized asset management? That's very, very true. And tokenization of real world assets and their placement on the blockchain enables asset managers to include them in their portfolios. So when you tokenize your assets, so you are exposing your assets and to asset managers to be able to probably take the tokenized assets and include them in their portfolio to invest in. So you generate more investors. So some of the DeFi assets also include private companies, real estate, as well as hedge funds shares. Such type of assets are generally feature additional growth and income mechanisms, which are subjected to algorithmic allocations alongside the benefits of transparency on the blockchain. Now, another question that is being asked is: does decentralized finance asset management have any risk? Well, unlike just like any other crypto or decentralized finance protocols, it is quite reasonable to consider the promising benefits associated with DeFi asset management and its future potential. However, there are many, many setbacks along the way, such as risk assessment, driving mass adoption, as well as concerns of algorithmic trading and liquidity. So there are certain risk exposure that you have to consider before you go into DeFi asset management. Another question, which is the last question I will take now, which they say that people normally ask is: will DeFi introduce democratization of assets to financial products? This is very important, and we should note that asset management in DeFi could improve the flexibility of accessing decentralized asset investment and sophisticated financial solutions. So it can offer an adequate impression of ways to allocated investment decisions through conventional benefits like flexibility and self custody. So with all this, we are very sure and certain that DeFi asset management definitely has a long way to go, but it is already bringing a lot of improvement and a lot of features into traditional asset management. So thank you very much. That's where I'll be ending, and we'll take questions now. Kenny, are you there?
Yes, I'm here. I'm here. Thank
All right.
you, Kazim, for that wonderful presentation. So there are
Thank
a
you, Kenny.
couple of interesting questions here.
Okay.
Okay, somebody asks this question. The person is saying, once I tokenize my physical property, does it becomes a DeFi asset?
Yeah, according to the explanation, when you tokenize your physical property now, and it's available for asset managers to add into their portfolio, definitely it becomes a DeFi asset. So it becomes a digital asset in a way, but mainly a DeFi asset that is now DeFi asset managers are able to invest and add it to their portfolio. So it's definitely true.
All right, awesome, awesome. All right, another question we have here is okay. So another question we have here is the insurance is like real life insurance where you pay premium against loss of fund. So I think the person is right.
Yeah,
What do you
yeah,
think?
as simple as that, as simple as that. Just like you pay premium on traditional insurance to insure your property, your car, your house, it's the same way you are paying premium, a cover now on yourself to insure your funds against events of any DeFi, any DeFi hack or any predetermined events or whatsoever. So it's just almost the same. So I don't think we actually mentioned
All right, cool.
the giveaway form. Was it posted at the giveaway form? I'm not sure the
No, the
giveaway form was
giveaway form has
posted.
not been posted. So
Has not been posted. Yeah.
let me see if I can get. Let me. Do you
Okay.
have it
So
there so that we just share it in the comments?
all right, all right. Let me just quickly check. Let me quickly check.
All right. So while you're doing that, somebody asked that. Okay, the person said, okay. So there's a question here. With blockchain bridge, you can change your Bitcoin to Ethereum or vice versa. Okay, so that is true, but not totally true, right? So
Yeah.
what's happening is that you are converting your Bitcoin to a token on the Ethereum blockchain. So that Bitcoin is going to get a representative token. So it's going to be wrapped Bitcoin on Ethereum. So with that wrapped Bitcoin, you can perform any normal operation that you can do on Ethereum, like earning interest, staking, etc. Right? And when you are done, you can now convert that wrapped Bitcoin back to your Bitcoin. Okay. But however, sometimes there's usually fluctuation in prices, right? But on a normal day, it should be the same price. The price of Bitcoin should be the same as wrapped Bitcoin. Okay. We also have another
That,
question here. What is the future of DeFi with the prospect of regulation of cryptocurrency in countries all over the world? Okay. That's a very good question. So I'm going to share my own thought about this, and Kazim is also going to do the same. So what I see about DeFi is that I think we are just getting started, right? And every day, more and more people are going to keep adopting DeFi, right? So DeFi is this global financial system that is borderless, right? And it's
yeah.
permissionless. So every single day, people are going to keep adopting DeFi. And the only thing
DeFi.
I'm just going to suggest is, guys, let's be creative. Let's look for use cases that we can, employ DeFi. Most of the solutions that we have in the place in the space, most of the solutions in the space are from people abroad, right? But Nigerians should also be able to, participate, contribute, right? So that's my only suggestion. Let's contribute and see interesting use cases of DeFi. All right.
I
So
think
please, Kazim, can
that's
you
very, that's
share
very
more
awesome.
insights on that?
Yeah, that's actually very awesome, and you've actually said it all because we should expect more to come, and definitely, as Africans, more development are also being done here as well, and we should expect more. That soon we're going to have more projects coming out of Africa. So let's just be hopeful and also be creative, just like Kenny said, and also be more optimistic. All right. I don't know if it's possible to see my screen. I'm not able to share the
Okay,
Oh,
okay.
I'm not able to share the link. Please, I think what we'll do is that we're going to paste the link after the session so people can come then later to fill their giveaway form. Or what do you think?
Yeah, that's nice. That's nice. You can
All right.
post it after. So you are going to pin the comment, the link as a
Yeah.
comment,
Yes. Yes. And please,
right? Or
everybody,
the
please,
description of the video, right?
yeah, remember to join the Binance Nigeria community and the Binance Ghana community just to stay updated for upcoming events. And please subscribe to the Binance Africa YouTube channel to watch the previous sessions and also upcoming sessions. Thank you very much. My name is Kazim Seidu. We'll see you next week on another edition of DeFi Mondays. Kenny.
All right, all right. So thank you, Kazim. So one more thing, if you guys have feedback for us, right? If you have recommendations for us, we are open to it. So feel free, please put it down in the comment section what you like us to discuss, right? Topics you like us to cover, what you want us to do, practical sessions. We are open to all this. Okay. So thank you very much for being part of today's episode, and I look forward to seeing you next week. Bye.
All right. Thank you very much. Bye bye.